Okay, let's truly unpack this. Imagine for a moment sending money internationally, not with those often slow, frequently expensive wire transfers that feel like they belong to another century.
Yeah, totally. Painful.
But instead, with the lightning-fast speed of an email powered by, well, the cutting edge of decentralized finance, Bitcoin. And not just any Bitcoin, but Bitcoin transacted through a fully regulated U.S. bank.
That's the key part.
Sounds like something straight out of a sci-fi novel, doesn't it? Well, that future, surprising as it might seem, is absolutely here. SoFi is making a truly historic and groundbreaking move.
It really is. Quite something.
Today, we're embarking on a deep dive into this monumental development, the integration of the Bitcoin Lightning Network and Universal Money Address, or UMA, directly into SoFi's banking app. Our mission, looking at our sources here, CoinDesk, Cointelegraph, Barron's, others, is to distill the most important nuggets of knowledge. We want to understand precisely why this isn't just another fleeting crypto story.
It's more fundamental.
Exactly. A fundamental foundational shift in how global finance operates, initially focusing on a critical corridor, remittances to Mexico.
What's truly fascinating here, and often lost in the technical jargon, is that this isn't merely about abstract blockchain tech.
Right.
This is about real-world, tangible impact for millions of people. Think of someone like Maria in Mexico, relying on money from her son working in the U.S., maybe for medical bills, daily living.
Yeah, essentials.
Exactly.
Yeah.
Historically, this has meant anxious waits, opaque fees, a big chunk of her son's hard-earned money just vanishing in transit.
It's frustrating.
Terribly.
Yeah.
SoFi's move has the potential to make these cross-border payments dramatically faster, significantly cheaper, and far more accessible. It really compels us to ask a crucial question for the whole financial sector. How deeply and how genuinely will traditional finance continue to embrace or maybe strategically integrate with these increasingly powerful decentralized technologies?
That's the billion-dollar question, isn't it? Okay, so let's get into this historic first, SoFi's leap. And here's where it gets really interesting and, frankly, a bit mind-bending. SoFi, a name many of you already know, right? Prominent fintech player.
Big name.
They hold a national bank charter in the U.S., and that's not just a badge, it's the cornerstone of how they operate.
Critically important distinction.
It means they're not some small, unregulated startup on the fringes. They're mainstream, chartered, held to strict standards by the OCC, the Office of the Controller of the Currency, capital, compliance, consumer protection, the works.
Right, serious oversight.
And this regulated U.S. bank is the pioneer here, integrating Bitcoin Lightning and UMA directly into their app. Our sources, like Barron's and Cointelegraph, they really emphasize just how profoundly significant this is.
So he says it is.
It's not some cautious pilot program or a tiny niche thing. It's strategic, full-throated embrace, starting with Mexico remittances, but with clear plans to go global.
Yeah, the ambition is clear.
And the fact it's embedded right in their existing trusted banking app, that immediately makes it accessible to their, 11.7 million members?
Huge user base, yeah.
It bypasses so many of those onboarding headaches and trust issues that, new standalone crypto platforms always face.
Absolutely. If we connect this to the bigger picture, this isn't just another fintech like dipping its toes in crypto.
Right.
This is a mainstream chartered bank embedding core blockchain infrastructure. And crucially, not for trading, but for utility.
Utility, that's the word.
It validates Bitcoin's underlying tech in a way that, frankly, countless white papers couldn't, because it tackles two big criticisms head-on: volatility and regulatory uncertainty.
How so?
Well, SoFi abstracts away the direct Bitcoin exposure for the end user, Maria in Mexico. She never touches Bitcoin herself.
Okay, so the user experience is just fiat to fiat.
Exactly. USD in, pesos out.
Yeah.
And it all happens within a regulated framework. So they're leveraging the rails, the speed, the low cost, without users needing to deal with the asset's risks.
That's really clever. It positions Bitcoin almost like a background transport layer for fiat.
Precisely. A neutral, global, censorship-resistant transport layer. That might be its true power for institutions, not just its price.
And SoFi's move basically provides a blueprint, right, for other banks.
A crucial blueprint, yeah. As highlighted in our sources, it sort of de-risks it for others. Think about the challenges, right? AML, KYC on a decentralized network.
Huge hurdles.
Data privacy across borders, capital reserves, risk assessments. The OCC must have scrutinized this intensely.
You'd assume so.
So their success provides invaluable case law and operational best practices. It proves the tech is mature enough and the regulatory path, while tough, is navigable if you do it right, compliantly.
That's a crucial distinction, and it really gets to the heart of why this is so intriguing, harnessing decentralized power within a regulated box.
Exactly.
And to do this, they're obviously leveraging sophisticated tech and key partners, right?
Mm-hmm.
While SoFi's direct partner for this specific rollout isn't named everywhere, the context, Coinbase, Nubank, it points towards solutions like Lightspark.
Yeah, Lightspark comes up a lot in this space, led by David Marcus, right? Formerly of Meta's Dime Libra project.
The very same. They're building that critical infrastructure for big players to connect to Lightning securely, at scale.
It's more than just software, isn't it? It's about liquidity, routing intelligence, compliance tools.
All baked in. Stuff a bank needs.
Yeah, they basically provide a plug-and-play for institutions to connect to Bitcoin's layer 2, abstracting away the really complex blockchain-native stuff.
And the fact that a regulated bank like SoFi is doing this, it signals a new era, doesn't it? Where you get blockchain speed and cost savings without sacrificing the security and oversight people expect from their bank.
Exactly. It's not a workaround. It's a deep integration. Best of both worlds, ideally.
Under the regulator's watchful eye, trying to forge a more efficient, maybe more inclusive global financial system.
That's the goal anyway.
Okay, let's pull back the curtain then. Let's look at the how. The mechanics for someone like Maria's son sending that money home.
Yeah, the user experience.
Yeah.
Because that's where the magic needs to happen for adoption.
Right. Our sources, CoinDesk, Cointelegraph, detail this. It sounds remarkably seamless, almost too easy.
Well, that's the point, right?
So imagine you, the user, want to send, say, $500 to Maria in Mexico. You open your normal SoFi app, same one you use for everything else.
Familiar interface, no new app to download.
You just initiate a transfer of USD.
Yeah.
Like any bank transfer, you're not asked to buy Bitcoin. You don't even really see it mentioned.
Okay.
Behind the scenes, this is the clever bit that USD is instantly, in real time, converted to Bitcoin. It's like an invisible fiat to crypto on-ramp.
Seamless. User doesn't need to worry about exchanges or anything.
Nothing. Once it's Bitcoin, it zips through the Bitcoin Lightning Network. Super fast, super low cost, because it's designed for exactly this kind of thing, instant off-chain payments.
Perfect for remittances.
Yeah.
Speed and low fees are king there.
Totally. Then, when it gets to the other end, that Bitcoin is immediately reconverted into local currency Mexican pesos, in this case, and boom, delivered straight to Maria's local bank account.
And this all happens. How quickly?
Feels like moments, apparently. Just incredibly smooth for both sender and receiver.
Yeah.
No crypto wallet needed, no exchange account, no Bitcoin knowledge required at all.
That highlights a really critical design philosophy, doesn't it? Abstracting away the complexity.
Absolutely.
The genius here, as sources like A-Invest and FinTech Magazine point out, is the user interacts only with familiar fiat currency, USD, pesos, whatever.
Right. Comfort zone.
The speed, the security, the low cost of Lightning, that just powers the transfer silently in the background. Invisible.
It bridges that gap, doesn't it, between traditional banking comfort and, let's face it, the sometimes intimidating world of crypto tech.
Exactly. It tackles that huge barrier, the perceived difficulty, the technical know-how, the fear of messing up.
Oh yeah, the fear is real.
By making it invisible and intuitive, SoFi is basically democratizing these advanced blockchain capabilities, making them accessible to people who don't care about the tech, but do care about faster, cheaper, more reliable transfers.
Absolutely. And then there's the other piece. UMA, Universal Money Address.
Ah, yes. UMA. Very important.
Anyone who's ever stared at, or worse, tried to copy-paste one of those crazy long crypto wallet addresses.
Oh, yeah. Stressful. Easy to make a catastrophic mistake.
UMA is a game changer. People say email for money, which is a decent shorthand, but for our listeners, it's maybe more like DNS for websites, right? A decentralized identifier system.
Good analogy. It maps a simple, human-readable address.
Like maria.rodriguez@sofi.com or maybe johndoe@lightspark.com.
To an underlying payment endpoint. Could be a Lightning invoice, a bank account, even other crypto addresses.
Sources like CoinDesk explain it well. It uses existing internet protocols to create this intuitive layer over the complex stuff. Drastically cuts down human error, boosts confidence.
That fear of mistyping one character and losing your money, gone. Or at least massively reduced.
Huge barrier removed.
The introduction of UMA is, honestly, truly crucial for mainstream adoption. It directly tackles that biggest user experience hurdle.
The scary address problem.
Exactly. That risk of sending funds into the void. It deterred so many people from using crypto for everyday things. especially vital stuff like remittances.
Makes sense.
UMA makes sending money as intuitive, as low risk as sending an email. But you get the blockchain speed and cost benefits too. It's that blend of simplicity with sophisticated tech underneath.
So it acts as this user-friendly abstraction layer, transforms something intimidating into something familiar.
Precisely. This alone could really accelerate how comfortable millions of people feel with blockchain-powered transactions, makes crypto remittances not just efficient, but genuinely user-friendly, adoptable without that steep learning curve.
Okay, so we've seen the how. Let's zoom out again. Why does this matter on a bigger scale?
Yeah, the implications.
Our sources are pretty unified on this. It's a bold, clear step confirming mainstream finance is genuinely accepting blockchain infrastructure, not just tolerating it, accepting it.
It's not a niche experiment anymore.
No, it's a major regulated player saying, look, this tech is viable, it's scalable, and it actually benefits our customers.
It's an institutional endorsement from within the system.
Which speaks volumes, right? It solidifies the idea that blockchain isn't just a digital casino chip. It's fundamental infrastructure for real-world financial services.
Yeah, it shifts the narrative significantly.
It really raises that fundamental question about the relationship between TradFi and crypto, doesn't it?
Absolutely.
Yeah.
So PayFi's move signals a real maturation, moving from, wary observation, sometimes skepticism.
Sometimes outright hostility.
Yeah, sometimes that too, to active strategic integration. It's an endorsement from inside the regulated system. That's powerful.
For years, the story was often opposition, dismissal, caution. Banks worried about regulation, disruption. SoFi's move shows they can integrate these technologies to seriously enhance what they already offer.
It legitimizes the underlying tech, provides tangible proof Bitcoin's network can work as a reliable, efficient rail within a compliant setup, paves the way for more trust, more practical application.
And crucially, they're not just playing around in a small market. They're targeting the absolute giant, the global remittance market.
Yeah, the numbers are staggering.
Sources like A-Invest, Bitcan.com, they put it at $740 to $740.5 billion annually.
Billion with a B. More than the GDP of many countries.
Exactly. And focusing on Mexico remittances first, that's one of the busiest corridors in the world. It shows real strategic thinking. Address a known pain point with this new tech.
It's not just moving small sums. It's optimizing a colossal, continuous flow of money that millions depend on.
Basic needs, education, healthcare.
Lifeblood for many families. So targeting Mexico, known for high volume, but also often higher fees and slower speeds via traditional routes. It shows a clear ambition, not just to disrupt, but to fundamentally improve a critical part of the global financial system.
The sheer scale really underscores the potential impact here, doesn't it?
Absolutely. Even if SoFi grabs just a small slice of that $740 billion, shifting those transactions to faster, cheaper rails, that's potentially billions in savings annually, faster access to funds, especially in developing economies.
Where every dollar really counts.
And it's not just about the money. Remittances are lifelines. Food, housing, school fees, medicine, reducing fees, speeding up delivery. It doesn't just mean more money arrives, it arrives faster.
Which can be critical.
Improves immediate quality of life, boosts purchasing power, strengthens economic stability. This is where abstract tech delivers tangible human benefit, moves beyond efficiency theories to real-world empowerment, tackles those old inefficiencies head-on.
Okay, so let's bring it back to you, the individual user. What's really in it for you?
The direct benefits.
Sources like Blockchain Council, FinTech Magazine point to some compelling advantages. First, 204/7 availability. No bank hours, no inconvenient locations, send money anytime, anywhere.
Big plus.
Second, transparent pricing, no hidden fees, no weird exchange rate markups. You know exactly what you pay and what they get, upfront.
Clarity is key. People hate surprises with fees.
Totally. And critically, third, significantly below average fees, all integrated right into your familiar SoFi banking app.
Seamless again.
No need for crypto expertise, separate wallets, complex steps. It's all in one trusted place. Less friction, more peace of mind, more trust, and ultimately more value for you and your recipient. Puts the control back in your hands.
And compare that to traditional remittance services, right? For too long, they've suffered from that trifecta. High fees, frustratingly slow processing, opaque pricing, especially for smaller amounts or to remote places.
Yeah, the World Bank data on this is pretty stark sometimes.
The combined promise of Lightning and UMA is to really democratize access to efficient money movement, offering a transparent, near-instant, cost-effective alternative to the established players like Western Union or Wise.
Raises a big question. How will those giants respond? They have legacy systems, huge networks.
That's the multi-billion-dollar question for them, isn't it?
Yeah.
For the end user, it's not just a small improvement. It's a significant boost to financial well-being.
Imagine Maria's son saving, say, 3% on every transfer. Over a year, that really adds up.
Substantial savings, life-changing savings, potentially. Money that can go towards the family's future, essentials. It's a powerful disruption to those old fee structures. Yeah. More equitable, more efficient, puts more money where it's needed most.
Okay, shifting gears slightly, let's talk broader implications, shaping the future of finance.
Yeah, the ripple effects.
This move unequivocally validates Bitcoin's utility far beyond just speculation, right?
Absolutely. For so long, the narrative was digital gold, store of value, maybe a volatile gamble.
Buy it, hold it, hope it goes up.
Exactly. But SoFi's move positions it as a practical, everyday medium for money movement, a true utility. Our sources, Barron's FinTech magazine, they really highlight this shift.
It's not just what's the price anymore.
It's what can it do, leveraging the underlying tech to solve real problems for millions. It shows the network is robust, secure, fast enough for high-volume, time-sensitive transactions, even for a regulated bank.
It's a powerful statement about Bitcoin's core design as a decentralized payment network, moving it into the realm of practical application.
What's fascinating here is that Bitcoin's original value proposition, a decentralized global payment network, is finally being realized in a mainstream, compliant way.
Yeah, moving beyond the price ticker.
That paradigm shift is critical for broader acceptance, a more nuanced understanding. Skeptics always argued, often rightly, that Bitcoin lacked tangible utility beyond trading. SoFi's action, using Lightning within regulation, provides a concrete, undeniable example of that utility, delivering a service demonstrably better than traditional methods: speed, cost, access. It underscores the innovation in Bitcoin's design, bypassing costly intermediaries and delays.
It feels like the original vision kind of coming to fruition.
In a very practical, impactful way.
Yeah. And this isn't just a one-off tech integration. It could set new regulatory trends.
That's a really interesting angle.
So SoFi embedding this crypto infrastructure under its national bank charter compliance, that could absolutely become a model.
The compliant model.
This isn't some shadow bank trying to skirt rules. It's a fully regulated entity navigating the complexities of integrating this new tech. FinTech magazine, MEXC, they note this signals a strategic compliant re-entry after SoFi paused crypto services in 2023 to get that charter.
Right, that pause was deliberate,
Yeah.
calculated.
Exactly. It was about ensuring future crypto ventures, like this one, would operate entirely within the strict regulatory framework. They must have worked incredibly closely with regulators, setting precedents, establishing best practices.
Paving a compliant path forward.
Which raises that important question. Will we see a wave of other banks and fintechs following this regulated edge model?
It seems plausible, doesn't it? The regulatory landscape has always been tricky, ambiguous for crypto.
Definitely a minefield.
But SoFi's approach could pave the way for a more integrated and, maybe paradoxically, a more regulated future for blockchain in banking. It shows innovation can happen within the rules.
Yeah, maybe it makes the whole space more palatable, more trustworthy for a broader audience, for other institutions.
Could accelerate clearer regulations, benefit consumers through security, institutions through less uncertainty. It's about harmonizing blockchain's potential with traditional finance's stability and trust.
And building on that, this really paves the way for more banks, more fintechs to adopt Lightning and UMA, right?
It lowers the barrier significantly.
If SoFi, a public regulated company, can do it successfully, prove it's viable, scalable, compliant, it massively reduces the perceived risk for others.
Success breeds imitation, especially in finance.
Our sources widely suggest this isn't isolated, it's part of a bigger trend. Bitcan.com echoes this. When a regulated player shows clear benefits and a proven path, it sends a powerful signal.
Transforms it from an experiment into a validated business case. Makes it easier for others to justify the investment.
Could trigger a domino effect? Accelerate adoption across the whole financial landscape?
Very possibly. The first mover advantage for SoFi is big, sure. But the second mover advantage for those who follow, maybe even greater. They learned from SoFi's efforts without charting all the unknowns themselves.
Good point. They get the benefit of hindsight.
Could definitely speed up the timeline for broader integration. And think about the network effect.
Right. More players, stronger network.
Exactly. The more banks, wallets, fintechs adopt Lightning and UMA, the more useful, liquid, efficient these networks become for everyone. Senders, recipients.
You could end up with a truly interoperable global payment system. Sending money across borders becomes like sending a text message, seamless, cheap, instant.
That's the potential endgame, fundamentally redefining global value transfer. Unprecedented connectivity, inclusion, efficiency.
Okay, so SoFi isn't alone in this space. Let's touch on some supporting stories. Who else is moving?
Good context to have.
Our sources mention Coinbase, obviously a huge name. They integrated Lightspark's Lightning infrastructure back in April 2024.
And they're seeing real results, right?
Yeah, reportedly 15% of their total Bitcoin transactions are now routed via Lightning. That's significant volume, real-world proof of capacity.
15% is huge, shows it works at scale.
And then there's Nubank in Brazil. Massive digital bank, over 90 million customers in Latin America?
No behemoth.
They also planned a similar integration via Lightspark, though sources say its full deployment is still pending.
But the intent alone is telling.
Right. These aren't small fish. They're industry titans, crypto-native digital banking powerhouses recognizing the value in Lightning.
It demonstrates that growing trend among forward-thinking institutions, leveraging Lightning for efficiency, better customer experience.
Even if Nubank's is pending, the plan itself signals the strategic value they see in it, especially maybe for reaching underserved populations more efficiently.
Absolutely. And Coinbase routing 15% of its BTC via Lightning. That's massive validation. Proves scalability, robustness, reliability under real-world stress. For Nubank to even plan it suggests a long-term strategic advantage in a competitive market.
And just circling back quickly to SoFi's own journey, it's important context, isn't it?
A pause and re-entry, yeah.
As A Invest and Barron's reported, they deliberately halted crypto in 2023 to get that national bank charter.
Wasn't casual. Strategic.
Then they re-enter, not tentatively, but with this fully compliant, innovative solution. It underscores their commitment to operating within that regulated framework.
Deliberately chose the harder regulated path.
And now they're innovating on that path. It signals a deep commitment to blending tech with the safety and trust of being a chartered bank. Big differentiator.
That historical context is paramount, yeah. It shows this integration is a deliberate post-charter decision. Signals commitment to regulatory guardrails while innovating. It really does suggest a template for others.
Blending banking and blockchain compliantly.
And again, sources confirm Mexico remittances are a huge corridor. Highlights the strategic choice. Target a real documented pain point with this tech.
Not just tech for tech's sake.
Exactly. Solve an existing large-scale problem. By tackling such a high-volume corridor, SoFi can quickly show the positive impact on a vast scale. Powerful proof point for Lightning and UMA in practice. That focus on solving a tangible problem is key for driving real adoption.
Okay, let's crunch some numbers. The beta spotlight. Because the numbers really tell the story.
Yeah, they put it in perspective.
Global remittance market, $740 billion annually. Just visualize that against SoFi's target corridors, especially Mexico receiving tens of billions yearly. Then project the potential savings.
The scale is hard to comprehend sometimes.
It's not just an abstract number. It's billions of individual transactions. Millions of people sending money for essentials. Food, rent, school, medicine.
The cumulative impact of even small efficiency gains is huge.
So FI, targeting a high-volume corridor like Mexico, positions them to capture a meaningful slice and demonstrate this utility on a massive scale.
And this is where what becomes powerfully clear, the sheer scale. Even small efficiency gains have a profound cascading impact. Global economies, individual livelihoods, it's optimizing a critical financial flow.
Frees up capital in recipient countries.
Exactly. For investment, education, local spending, entrepreneurship, stimulates development, reduces aid reliance. It's not just cutting a fee, it's reallocating resources more efficiently, empowering people, communities, transformative potential.
And maybe the most compelling number for the user, the fee comparison.
Direct benefit.
Sources consistently cite traditional fees around 6%, maybe 7%, often higher for smaller sums or remote areas.
World Bank tracks this stuff. It's often quite high.
Now imagine the savings with Lightning plus UMA. Hypothetically, maybe bringing fees down to 3%, even lower, maybe 1% eventually.
That's real money staying in people's pockets.
When Maria's son sends money regularly, saving 3–4%, that's not small change, it's life-changing. A direct financial advantage impacting disposable income, quality of life.
Especially where every dollar counts. Lightning plus UMA disrupts the old mechanisms, correspondent banking, forex markups, lack of competition, makes it more equitable, accessible. That fee reduction alone is huge.
Deeply disruptive to traditional players. Which brings us back to market dynamics.
Right. If SoFi, a regulated bank, significantly undercuts traditional providers, It could trigger a fierce race to the bottom on fees industry-wide.
Benefiting consumers everywhere.
It puts immense competitive pressure on the incumbents. They've had comfortable margins due to legacy systems. Lightning UMA is leaner, more efficient, inherently global.
So the old guard has to innovate fast, cut fees drastically, or risk losing serious market share.
Pretty much. It's a powerful disruption to those often opaque fee structures. Fosters transparency, fairness, consumer choice.
And looking at Lightning Network growth data, it's illuminating, isn't it?
The charts show a clear upward trend.
Especially after Coinbase rolled it out in April 24. It's not just theory, it's actively being used, stress-tested, growing exponentially.
Coinbase hitting 15% of BTC transactions via Lightning. Huge validation. Shows capacity, reliability.
The growth isn't just speculation, it's practical use cases becoming more common, which strengthens the network liquidity, robustness.
That adoption curve is a testament to its utility, its maturity. As more big players integrate, that network effect kicks in strongly, makes it better for everyone.
More usage improves liquidity, reliability, addressing earlier concerns.
Exactly. Every new integration, every user, makes the whole ecosystem more resilient, valuable, attractive, encourages more adoption. It's that self-reinforcing cycle. Tech efficiency drives user growth, which enhances the tech's capabilities, positive feedback loop.
And let's not forget SoFi's reach and the speed difference. 11.7 million members, even a fraction using this. Huge impact.
Massive potential scale-up.
And the speed. Traditional transfers, 1-3 days, sometimes longer.
Can feel like forever when you need the money.
SoFi Lightning Rails promise near-instant delivery. It's not just better, it's transformative, especially in emergencies. Maria needs money for unexpected medical bills.
Seconds versus days. It's a lifeline.
That combo, large, trusted user base, plus dramatically better service positions SoFi to make a real dent fast.
That speed comparison is maybe the most tangible benefit. Access to funds in seconds. Life-changing. Financial inclusion, stability, especially where quick capital is crucial.
And SoFi's existing trust and infrastructure lets them scale this impact rapidly. Leverage what they have to deliver something cutting edge.
Strategically smart.
Okay, final point on the data, the regulatory landscape map. Visualizing bank-chartered fintechs like SoFi against traditional players, it really highlights their regulated edge innovation.
They're carving a new path.
Not avoiding regulation, but embracing it to innovate within it. That national bank charter is key.
Puts them in a unique spot.
They combine fintech agility and tech with traditional bank stability, trust, oversight. Makes their Lightning UMA integration groundbreaking technologically, but also credible, secure, maybe industry-defining.
That visual emphasizes their unique position. Operating under a bank charter while deploying cutting-edge crypto sets a precedent. Provides a blueprint for innovation within the rules, security and efficiency.
Raises the question, is this regulated edge the new gold standard?
Could be. So SoFi shows the future might be integration, not purely traditional versus purely decentralized, a symbiotic relationship. Their journey is a case study for how established institutions can evolve, adapt, lead. Prove compliance and innovation can be mutually reinforcing.
Wow. Okay. What an incredible deep dive we've taken today. SoFi leveraging Bitcoin Lightning UMA, fundamentally reshaping global remittances.
It's a lot to take in.
From that historic first, a regulated U.S. bank embracing this tech, to the seamless user experience, hiding the complexity, the massive market targeted, the broader implications for finance regulation. It's clear we're witnessing a true revolution, not just evolution. It's about so much more than just crypto. It's about making money movement more accessible, undeniably faster, significantly cheaper for everyone, really impacting lives like we discussed with Maria.
Absolutely. Which leads to a really important question for you, our informed listener, to maybe chew on.
Okay, let's hear it.
If a regulated bank, under strict oversight, can successfully integrate Bitcoin's layer 2 for something as critical as remittances, how much further can this tech permeate traditional finance?
Good question.
Could we soon see Lightning powering global payroll, everyday microtransactions, loyalty programs? And what profound challenges, maybe even existential threats, does this pose for traditional institutions who don't adapt? The ground is definitely shifting.
That is definitely something to ponder. The landscape is shifting beneath our feet. We really hope this deep dive into SoFi's Lightning plus UMA innovation is helping you stay ahead of the curve in this fascinating, fast-evolving crypto banking crossover.
Hope it was useful.
If you found this discussion valuable, insightful, or maybe it just sparked your curiosity, please do us a favor. Don't forget to like this video. Leave us a comment with your thoughts or questions down below. We genuinely love engaging with you all.
Yeah, comments are great.
And of course, subscribe to our channel and hit that notification bell so you don't miss future deep dives. Your engagement, honestly, it truly helps support what we do here. It boosts our visibility in the algorithm, lets us keep researching and bringing you what we hope are the most exciting, insightful developments in finance and tech.
It really does make a difference.
So thank you for diving deep with us today.